Hello YouTube, it's your boy the Crazy Trader, and today I am coming to you with the Ivr Earnings Report. I know a lot of you have been asking of it, so I decided to make a video of it today. I'll make a quick one on that video. I didn't want to really make a video on it because I've made videos of earnings reports over and over again, and I don't want to go back to an earnings report again because you guys can see what is happening, and I really didn't want to be repeating myself, especially when it comes to Ivr stock, because I've made a lot of videos about it. So I'll just hit it real quick, and then I'll move on to Ivr. I'll move on to something else. Okay. This is a stock. It dropped. It really dropped from 385, or I think 386, from 386 to 361, and that was because of the earnings report that hit. I don't know why people panicked and sold, but the earnings report dropped it really steep. It was at a point in time at 358 when this happened, and I'll show you what I did when it happened. You guys know I've always pegged my threshold at 2,500 shares. That is what I wanted to have, 2,500 shares. But when it hit 358, it was too tempting, so I bought 100 more shares of it. Okay, I bought 100 more shares when it hit 358. So I have 2,600 shares, which is not what I intended to, but it was too tempting to do. So I did that. Okay, so this is where I bought it. I bought 100 more shares at 358, when it hit 358, because it was tempting, and I like the stock, so I keep buying it. If the earnings report is scaring you to sell the stock, you shouldn't be holding this stock in the first place. Okay, because you should know the fundamental of the stock before having it. If you're holding it for a very long term, then you should know the fundamental of the stock before buying into it. If you've bought it and you just wanted to flip it and it dropped this way, then my big sorry to you, because it's a big loss. It's not even a loss until you sell it. So if you don't want to take the loss, then don't sell it. But if you want to take the loss, you can sell it. Let's go straight to the earnings report. Where can I find this? This is the earnings report. So I'll give you the financial summary of it, the basic financial summary of it. I won't go too far into it. The net loss per common share was 0.09. That's 9 cents, compared to the net income per common share, that was 59 cents in the Q4, that's 2020. And the core earnings per share, so the earnings per share, which is also a vital point that you always have to look at, is 11 cents here, compared to 10 cents in the last quarter, that's 2020 in the last quarter. And the common stock, I mean, you guys all know that this is the dividend, 9 cents per share, compared to 8 cents per share in 2020, the last quarter. So most of this information, you guys have all of it. And the book value, this is one of the core things that I want to talk about. So the book value per common share is 365. It used to be 386. Okay, 386. That is why I averaged my stock at 376. So I had a 10 cents on every stock. That is, I was averaging a 10 cents on every stock for the book value. But the book value has obviously dropped, which is fine with me, because I understand the whole concept of it. So the book value has already dropped to 365, which I don't really mind too much, because it's okay for me. I'll still hold it until they cut dividends. If they cut dividends, that is when I sell. But I don't think they are going to cut dividend, because they increased their investments from 7.1 billion to 9.1 billion. That is more of what I'm looking at. So the economic return in this quarter was 3.1% compared to 13.5% in the last quarter. In the last quarter, it grew. I mean, the economic return was big, and this wasn't too impressive, but that's fine with me. I'll read a very basic paragraph for you. So we are pleased to announce the core earnings of 11 cents per common share. This is something that you have to look at in the first quarter of 2021. And then the increase in our core earnings was largely a result of the successful deployment of $161 million. So that's what happened. $161 million in proceeds from their common equity capital raises that they did in the quarter was reinvested, okay, in the agency residential mortgage-backed security. So in addition to an attractive reinvestment environment in the later half of the quarter, our higher core earnings cover the increase in our common stock dividend of 0.09. So that's 9 cents per common share. So we're looking at the quarter end, almost all of the 9.1 billion investment portfolio was invested in an agency RMBS. So they increased this from a 7.1 billion to a 9.1 billion investment portfolio. So there's an increase in the portfolio. That's about 2 billion increase in the portfolio. So I'm looking forward for these in the next few quarters, which I'm happy about. And they maintain a sizable balance of unrestricted cash and investment totaling 692 million. Let's say 693 million. So this is some information that came with the earnings report. And I want you to take a look at the Zacks Equities research. First of all, let's look at their heading. IVR's earnings beat estimates. So basically, to them, the earnings beat the estimates. So earnings was 11 cents. I've already said that, beating the Zacks consensus estimate of 8 cents per share. This compares to earnings of 49 per share a year ago. That's a year ago. Before the pandemic hit, they had a 49 cents per share. So now it's also a very good earnings that they're having. The quarterly report represents an earnings surprise of 37.50%. Let's say 38%. A quarter ago, it was expected that this real estate investment trust will post earnings of 7 cents. So to them, they were expecting to post earnings of 7 cents per share, when it actually produced earnings of 10 cents per share, delivering a surprise of 42%. Okay, and this time we also delivered a surprise of 37.5%, which is also a good quarter. So yes, the book value was down, but it was also a great quarter. So if you're panicking and you want to sell, you shouldn't be holding this stock in the first place. And I think if you really want to sell, I encourage you to sell it and look for something else. There's Reality, that's O, the ticker symbol O, that you can go to, and it's also a great stock. I love the stock, so I keep buying at a dip. I went to Nasdaq.com and looked at the institutional ownership, which has also increased by, I think, 3%. It was around 48%. So that means institutions are buying. They've kept buying. So now it's at 51.2%, which I think is a very sizable amount. That means 51% of the shares are owned by institutions. They are not sellers. Those people are long-term holders. So I'm with them on that. BlackRock, I don't know if this is a recent update. Okay, the 29%, almost a 30% increase. That's 9 million shares change. I don't know if this is a recent increase, because this is right in the last quarter of March. So I think this is it's a recent increase. I would look at my other videos and see if this is a recent. If this is a recent increase, then that is huge, and I'm going to keep holding this stock for a very long time. So basically, you've all seen the earnings report. I don't know what else you want me to tell you guys, but it's a great earnings report. Apart from the book value, it's a great earnings report. If you bought at a higher price, what you should be doing is averaging down. That is if you believe in the stock. But if you don't believe in the stock, then it's okay, just take the loss and move on to something else. But if you do believe in the stock, average down, because that's what I'm doing. I'll show you my portfolio right now. Like I said, 376. Hopefully, if it keeps going down, hopefully I can average down to somewhere in 3 to 340. 340 is a sweet spot for me. Okay, I set my limit on 2,500 shares, but now I hold 2,600. If it keeps going down, I'll set the limits a little higher to 3,000 shares. So it's a great opportunity for you to buy if you don't have. Okay, anyways, I'm not a financial expert, so don't take my word for it. I'm just giving you my perspective of the stock. So do your due diligence, and it's a great stock for me. I'm going to keep investing in it. If you guys like it, buy it. If you don't, sell it. Okay, don't hold a stock in panic, otherwise your blood pressure is going to go up. Never hold a stock in panic, or never hold a stock that you are not too comfortable about their fundamentals. So do your due diligence. If you want to buy, keep buying. If you want to hold, keep holding. If you want to sell, sell. Okay, let me leave you. This is just a quick one, so I'll leave you for the week. And like I always say, scared money don't make money, so you always got to risk it to get the biscuit. Stay safe and peace.